Good morning, Luke. Thanks for joining us on the M&A Diaries. How are you this morning?
Yeah, good. Thank you, James. Yeah, very well. Thank you for having me.
Fantastic. Well, look, it's only a few weeks since you launched your own business, so you must be super busy. So I appreciate you taking time out of your diary to speak to us. I guess for those that don't know you, Luke, it'd be great if you would mind just giving a bit of a potted history on yourself and kind of understand the mission that you're on now, yeah, as the modern firm.
Yeah, absolutely. So, as you say, we've kind of only been out in the wild really with the modern firm for the last kind of month and a half or so. Conceptually, it's kind of been in the works for quite a bit longer than that. And I guess just to kind of give that kind of brief background, I started my career in the accountancy sector about 13 years or so ago now. I've worked across a variety of firms of different size and complexity, starting my career originally at a small owner managed practice here in Cheltenham, in the Cotswolds, where I live. I did the whole kind of move down to London thing and spent time working at firms of varying kind of, again, sort of size and complexity. And towards the back end of my time there, I became part of the founding team at a small boutique advisory firm called Acclivity Advisors. And Acclivity was a practice that was ultimately acquired by Cooper Parry, who I'm sure many people will know are a slightly larger firm to Acclivity, sort of top 20 in size. And we were acquired back in January 2023, just at the point where Cooper Parry themselves were going on that kind of M&A journey, really kind of looking to buy and acquire firms of themselves. And we were kind of one of the first transactions that completed post investment. And I spent a couple of years at Cooper Parry in a few different roles. Firstly, working as head of operations for our tech and high growth team based down in London. And then latterly kind of more involved in our M&A and integrations team. So specifically helping to kind of integrate businesses that Cooper Parry were buying into the sort of central kind of motherboard, really. And yeah, kind of, have come out the other side of that now, looking to, and will have looked to get back to doing some work on my own. And specifically, I've launched the Modern Firm to kind of really help an industry that I've become so passionate about over the last 13 years or so, now become sort of more technology kind of enabled, more technology advanced. I think the industry personally is at a really interesting and quite exciting juncture at the moment. I think there's a whole host of opportunity out there for firms that are prepared to really lean into this kind of like new way of working and kind of embrace the changes that are coming. And I think ultimately practices that are prepared to do that have got a really exciting and quite interesting future ahead of them. But yeah, for me at the moment, kind of the modern firm is hoping to kind of partner with firms of all size and complexity to help them overcome many of those challenges surrounding technology enablement, process optimization, resourcing, and yeah, many other operational kind of headaches and hurdles that I think lots of practices now are going to have to really start waking up to.
Yeah, absolutely. Obviously, the conversation around AI, technology, and softwares has been growing and growing and growing, and I think we're really in the eye of the storm right now with everything that's going on with the changes. And actually, probably it's a good conversation starter, really, to kind of open up here. More so now than ever before, when people are looking at maybe potentially selling or what the next steps are ahead of them in terms of that pathway for tech and AI. Obviously, with private equity coming to the market, we're now seeing that quite a divisive kind of conversation now, whereas do I go the private equity route because I feel that it's going to be safer in numbers by being part of that larger infrastructure, where there may be a perception that because they're private equity backed, there's more of a deep pockets to reinvest and invest in technology, AI, etc. Or do I stay independent? And with someone that's got the finger on the pulse, it'd be really interesting for me to understand, where do you think real innovation comes from? Is it from these private equity beasts and consolidators that we're seeing now, or is it from the individuals that have got to think smarter because they haven't got the pockets and the investment that the private equity have?
Yeah, exactly. I mean, look, I'll try not to answer this too much like a politician, but I think the reality is there are really kind of strong arguments for and against kind of both of those kind of camps. I think the world in which I've come from in terms of private equity backed kind of Cooper Parry kind of, I guess, offers certain sort of levels of insights and stuff as to what kind of can be achieved when you've got kind of private equity backing behind you, when you've got kind of, as you say, deep pockets to be able to invest in technology and innovation and stuff. And I think there's a whole host of kind of benefit that comes with operating in those types of environments. But equally, and I guess just to play devil's advocate, I think the smaller kind of more independent kind of firms that are able to kind of perhaps innovate more quickly and kind of sort of not have that overlord hanging over the top of them in terms of people kind of perhaps dictating certain technologies or pathways that they have to take because it's the kind of assumed normal and stuff, I think is also quite an interesting camp to be in. I think, for me, one of the kind of big, I guess, frustrations that came from kind of leaving that smaller, more independent world and moving into, effectively, that private equity kind of led Cooper Parry type environment was the fact that the ability to be able to kind of, stick your entrepreneurial hat on and innovate and kind of drive forward sort of solutions and stuff was slightly kind of more stifled or kind of boxed in them versus how we were running the firm previously when we were running Acclivity. And that's not a criticism to the kind of the way that either Cooper Parry operates or more generally the world that kind of private equity backed firms operate. And again, I'll caveat by saying that for me, I think kind of the influx of cash that's come into the market via the kind of private equity model has been super beneficial and super positive. But I think with it kind of comes kind of, again, sort of slightly more kind of controls and sort of, oversights that sometimes prevent and prohibit firms from actually kind of, doing things that are more innovative and more kind of forward thinking. I think as well, like there's a bit of a, from my perspective, I'm not sure if it's a misconception or a preconception that some of the, some of the technologies and some of the vendors that exist in the market, kind of at the more sort of like, SaaS end, the kind of smaller end of the market, they're not fit for purpose for the likes of kind of bigger, private equity backed kind of consolidators and groups because perhaps they're less kind of well tested and less proven and stuff. But, I think, I guess what I'm trying to say here is that sometimes there's a bit of a kind of feeling just because you have got those deep pockets and you have got that kind of backing behind you from private equity, throwing kind of, lots of cash at more expensive kind of enterprise-led solutions is the only way to go about kind of innovating and moving forward. And I think it's a shame really, because there are so many kind of, great players and great technologies that exist kind of at that more independent end of the market that I think a lot of bigger firms would be wise to kind of open their eyes to a bit more really and kind of lean into a little bit more. And for me, that kind of, is one of the, I think, limitations and frustrations sometimes that can come with that. So, but yeah, as I say, look, without being too political about it, I think, you can sort of offer pros and cons kind of both ways really. So yeah, it depends how you want to skin it.
Yeah, no, you walked the line well there, Luke. You walked the line there, but no, I mean, it's certainly for me, it's certainly been a huge shift in terms of what the drivers and motivations for people maybe possibly looking to sell on the conversations. Whereas beforehand it was very strongly around lack of succession and maybe issues with talent recruitment and retention. What we are seeing now is people are looking around and seeing their peers being bought up by the larger consolidators, and there seems to be where the worry about being left behind in terms of the evolution of the technology and adoption of technology, they're really feeling like it might be safer to go and join one of the larger firms there where there is larger infrastructure. And I guess that goes back to the smaller independent firms. They haven't got the non-fee earning individual setup as such that the larger firms have got, and they're having to spin all these different plates from HR, marketing, looking after clients, the addition of more and more regulatory admin that coming down the line. So for them to actually concentrate and first and foremost keep a pace of what's going on in the market is super tough for those independent firms, especially if it's one or two or three partner firms, which I guess is kind of the gap that you're trying to plug as a modern firm to be, well, we can be that extension to your team, but with all that knowledge, so you don't have to worry about that side of things.
Yeah, exactly. And as you mentioned it, I think, kind of worth surfacing. That's exactly the problem that we're looking to try and solve with the modern firm. Again, I think kind of bigger firms that have got deeper pockets, private equity backed or not, have typically got a lot of this stuff figured out themselves in terms of internal, transformation teams or kind of like, teams of, tech people that have got abilities to be able to lead on a lot of these kind of more strategic projects that a lot of the kind of smaller firms just don't have the luxury of being able to do. And through the reasons that you've mentioned, and probably more as well, around kind of lack of capacity, lack of resource, lack of maybe budget in some part as well, and perhaps as well the kind of fear of just not really knowing what they don't know. I think across the entire accountancy industry historically, hopefully not offending too many accountants here, I think it's quite a safe and steady kind of profession that kind of doesn't like and doesn't like, in the main at least, testing things that aren't proven. And I think with kind of technology, or change as well, right? And I think with kind of innovation and kind of advancements in kind of technologies and ways of working, all of those things require the kind of step into the unknown in some parts. And again, if you don't have the luxury of having internal kind of resource or knowledge to be able to help you navigate that journey, it can be very, very daunting. And the minute you have to kind of take fee earning staff off the clock to actually start delivering these types of projects and delivering these change management kind of exercises, equally that kind of, can result in firms, tying themselves in knots a bit and kind of, lowering utilization and whatever else. And yeah, I think for me, if there's a way of me being able to kind of help plug that knowledge gap with what we're looking to do with the modern firm and to help firms on that kind of journey, then, again, I think at all ends of the market, it serves a really, really valuable kind of resource to a ton of people.
Absolutely. And you alluded to earlier on about the just the amount of solutions that are out there and the different vendors. I mean, a digital accountancy show was only last week, and we saw how many vendors there are there. And you go to other conferences. What from your experience, what are the common mistakes that practice owners are making now when looking at their tech stack and the different solutions out there? What are the main points where you come in and you're doing an audit of what they use? Yeah.
I think for me, the accounting industry, probably unlike any other industry that I know, certainly has kind of got the afforded luxury, but also challenge of the kind of amount of choice that exists in that market to be able to kind of solve a lot of the problems that we have. I think you're right in observing that conferences like DAS and Accountex and Fab and whatever else in between ultimately kind of demonstrates the sheer volume of kind of solutions that exist in the market for accounting firms to be able to improve all areas of their practice, be that from practice management through to kind of expense management, through to kind of, AML and KYC, reporting, and whatever else in between as well, right? There's a whole host of technologies and vendors out there. And I think over the last kind of few years specifically, we've seen a real kind of exponential increase in the number of different options that exist, which, in some respects is quite helpful, but in others respects kind of feeds into that kind of confusion and sort of daunting nature of the landscape that needs to be navigated. And I think for me, and again, I've talked to a lot of firms about this recently and a lot of people more broadly, that, you can be lulled into a bit of a false sense of illusion or security even when you turn up to a conference like, DAS or Accountex. You see all of these solutions out there and you just automatically assume that the entire industry is doing all of this stuff really, really well, because it's very easy for vendors to be able to showcase all of the great stuff that their particular software and their particular solutions can provide. The reality is, for me, still in this industry, it's a real kind of tip of the iceberg in terms of the firms that are actually doing this stuff really, really well. There's a huge underbelly of that kind of iceberg that is the majority of the market that still hasn't quite figured out how to actually navigate it. And I think what happens typically is a lot of firm owners or key decision makers turn up to these conferences, or kind of hang out online on LinkedIn or wherever else for 5-10 minutes, and you end up kind of getting drawn into what I affectionately describe as shiny object syndrome, really, where they see the solutions that they think instinctively are going to really, really help better their practice and better their ways of working. They look to kind of take out a trial of that product. They look to plug it into their practice. And maybe for a couple of weeks or even for a couple of months, it ends up sort of solving a particular pain point or problem that they had. But the reality is that's really just putting a kind of sticky plaster or a band-aid over the top of a much bigger problem. And I think if you're not considering technology implementation, or process optimization or whatever else as part of a more kind of well thought out holistic strategy that involves considering that whole end to end, and it's not just finding and identifying the right types of softwares, but it's about figuring out the kind of, again, the problems and the pain points and the workflows that aren't working out for you, the change management piece as well, which is super important. And I think, change management historically has kind of always been a kind of phrase that, many people that kind of are familiar with it, at least, would kind of associate to huge kind of like, bank kind of grade level sort of like project implementations and stuff. But the reality is change management is a kind of framework that needs to be applied to any piece of technology change or process change or people change in an organization. And again, for me, firms, even if they're okay or even good at identifying the right types of tech and the right types of vendors that are going to help make their practice better, if they're not considering how it's going to impact their people and impact their kind of like client experience, then it's not going to be worth the paper it's written on in terms of the benefits that it can provide. And again, for me, I think it's really laboring that point that considering all of this stuff as part of a more holistic, kind of well thought out, structured kind of end to end strategy is the only way to go about it. And that's going to become even more important and more paramount moving forward with the continued rapid sort of advancements with the technologies that exist. So I think for me, kind of strategy sits at the core of all of it. And I just don't think, many firms are particularly good at doing that, either independently or just in general.
And for me, and you probably see this a lot more than myself, but it seems to be that some some accountancy practices now are just bringing in tech for tech's sake, and they've got this huge tech stack, and actually, there's probably a lot of the tech in there is duplicated or doing the same, or could do the same
100%.
role, but they're not quite understanding the full capabilities of that tech stack that they're using,
100%.
which is having the opposite effect a lot of the time, because a lot of these firms, they want to move towards more technology and automation to kind of increase profitability of the business. We tend to see businesses or practices that now their tech use have got better profitability margins, but actually where they've got so much tech now, there's some firms out there where they've got subscriptions left, right, and centre, and it's reducing their profitability of the business. You must see that quite often now.
100%. It's like the modern day hoarding, really, isn't it? Where you kind of end up just sort of like, keeping all of these things in your house or in your office because you think that one day you might end up needing or using them again. And before you know it, you end up with kind of cupboards stuffed with stuff that you just don't kind of either know what it does or sort of like why it does it. And I think you're absolutely right that so many accountancy practices at the moment are, again, very good at being drawn to the new and the latest sort of shiny object and stuff. And, typically a lot of these kind of SaaS platforms and products don't carry huge kind of, monthly subscription costs. And maybe they end up seeing kind of, £10 here or £20 there leaving their bank account every month. And it just becomes this like nominal white noise that exists in their head. But then, yes, before you know it, those kind of £10 here, £20 there soon very quickly stack up into quite a lot of money. And I guess the kind of broader point beyond the sort of like financial impact that can have to a firm is that you've just got all of this kind of, disjointed sort of systems and data and people not knowing where to go for different bits and pieces. And, I talked to this quite a bit at DAS this year when we did a talk around what the future state of the industry is going to look like. And, although the kind of headline, answer to that question from my perspective is no one's entirely sure where all of this lands on many, many different fronts. The reality is, for me, so many firms at the moment have got stuff to do in terms of addressing the kind of foundations and the basics that exist in their practice to be able to truly build on all of the kind of good stuff that is coming. Because again, it's all very well and good considering the latest AI and the latest kind of automation and stuff, but if you don't have kind of a system or technology stack or a data set that is actually structured and usable in a way that is actually going to benefit you as a practice, then there's no point getting excited about all of that. And I think all of that kind of leans into the stuff that you mentioned around kind of having, disjointed systems and kind of, technologies that, or softwares or subscriptions that aren't being used. You need to kind of do that entire sort of drains up audit on what your back office looks like. And actually kind of like fix the house first before you start trying to fix the foundations first before you start trying to go on to build the house.
And again, not to annoy different camps, but do you feel there's a bit of the accountants not maybe looking to fully understand the technology and or software providers that they're using, or is there where the vendors could do a lot better in educating the client base that they're looking to speak to?
I think it probably is a blend of both, and I'll draw down into that a bit. Not again sound too political or politician like about it, but I think a lot of vendors that I'm talking to at the moment, and again having kind of active conversations with tons of different vendors about this sort of topic, I think they would much prefer a world in which accountancy firms were not just kind of like taking on trials or subscriptions to their software, but actually fully activating it in a way that actually kind of gets the most out of the product. Because
Absolutely,
I guess if you're using a piece of software only to the tune of 5 or 10% of its capability, then yes, you might have a client that's paying you that kind of monthly subscription for that particular kind of application. But you probably have also got a client that is, dissatisfied or unhappy or kind of like perhaps even bad mouthing your product because they're not fully aware of actually how that kind of platform could benefit them and their practice. And I guess if you're a kind of if you're a SaaS vendor, if you're a vendor in general that has a product that can kind of command higher subscription fees by kind of more deeply activating that product, you've got more motivation really to want to actually ensure that, again, you've got clients not just using the platform, but fully kind of embedding it into their way of working. And so, but I think a lot of that isn't necessarily down to the faults of the vendors specifically. I think that a lot of vendors are pretty good at being able to, sell their solutions to clients. I think a lot of vendors are pretty good at being able to kind of demonstrate the value that that particular product acts independently, but they're not well placed nor kind of incentivized to actually do that as part of a more holistic tech strategy. And ultimately, if you're not considering this stuff as a more kind of holistic tech strategy, then you're not going to realize the true benefits behind having that particular platform being used with that particular platform. And so again, for me, that's why you either have to have the internal resource and kind of knowledge and capacity to kind of do that more strategic piece
And
yourself,
navigate it.
and
Yeah.
or engage someone externally to be able to help on your behalf and do that. But I think to your other point, there's definitely a world in which kind of, accountancy firms, are to blame in a way, because I think, again, there's lots of people, and I think it's quite natural as well, just to be kind of like drawn into those sort of new and shiny objects and stuff. And I think you end up, before you realize it, end up in this kind of world in which your technical debt is kind of more than you can kind of deal with. So I think it's a blend of those things. But again, I think the problem's deeper than it kind of needing to be either an accountant's problem or a vendor problem. It's that more kind of, integrated strategy piece.
Yeah, and education around it
And
from both
education. Yeah,
sides. Yeah, no,
100%.
definitely. Well, look, moving and focus towards more M&A orientated conversations now. It's great to have you on, because obviously you've gone through a sale process yourself, as you said at the top of the conversation. So it'd be good to understand how technology and software played a part for you getting prepared for your sale to Cooper Parry back then.
Yeah, exactly. So, I mean, I guess if we set the scene a little bit, and kind of sort of talk through what that process looked like and where it kind of came from. So, Acclivity was a business that was founded, back in 2019, I think, right in the midst of COVID, and that was a practice that was actually carved out of a previous accountancy practice. So, my old kind of boss and partner and good friend, Asif Ahmed, who still works as a partner and head of the early stage team at Cooper Parry, was previously a partner at a firm that ultimately he carved himself out of. So when we actually incorporated and founded Acclivity, that business and that portfolio of work had actually come from a previous firm. And we'd kind of already gone through that kind of process around actually kind of carving out a portfolio, setting up the systems and the technology and the people and the processes and stuff, in a way that initially was a complete blank canvas, and allowed us to design Acclivity in a way that kind of, was structured quite lean from a people perspective, but quite kind of sophisticatedly from a kind of technology and automation perspective. And all of the kind of like tooling that we had in place, from practice management through to onboarding software through to kind of client delivery tools, were all kind of, really quite well oiled and sort of structured in a way that allowed that practice to run not completely autonomously, but quite kind of like, autonomously, and sort of had all of the data points that we needed at our fingertips and disposal. And when that business ultimately merged with Cooper Parry back in January, 2023, it was quite a smooth process in terms of being able to actually kind of have all of the data that we needed at our fingertips at the kind of request of the at the request of Cooper Parry. So, being able to report on kind of like, client lists and kind of like, revenue positions and, kind of, compliance sort of, gaps or lack of, really, all of that stuff was very easy to be able to kind of extrapolate from the systems and stuff that we had. And, naturally, there's always going to be, some challenges and some hurdles that you have to overcome in terms of things that you don't know until you know. But, versus some of the other I guess experiences that I've had with that sort of stuff with other businesses that we've kind of worked with, yeah, I think Acclivity was really, really sort of well positioned in terms of its kind of, tech stack and the kind of data that we had at our disposal. And for me, I think, any firm moving forward that's looking to kind of go through that kind of exit sort of journey, or perhaps even if they don't know that's the kind of endpoint for them, they should always be kind of sale ready. And I know that, when you joined me at my launch event a couple of weeks ago, we talked about this on a panel to that exact topic. But for me, having that mindset of actually being sale ready and having your kind of systems and your data and your people and everything else in a place that, if an acquisition does come knocking on the door, you can actually kind of like really quickly serve up all of that data in a data room and have it, laid out and interpreted in a way that's kind of, super straightforward. The benefits to that are unparalleled, really.
Yeah, yeah. And as we were saying at your launch event, being sale ready is just generally good practice for a business anyway, because being sale ready means that your business is in the best possible position that it can be. And really, you want that happening regardless of you looking to sell or not, because you're going to increase profitability, you're going to be able to serve your clients better, growth will be easier, you'll probably be a lot more attractive both from a recruitment point of view, as well for new talent coming into the market, and having all that information and data, especially as we move, as we know, compliance is going to be more and more automated. So accountants need to start moving towards that more advisory piece, or working really well with their clients. So having all that information together is going to make those conversations a lot easier as well.
100%, yeah, 100%. And I think that's a really important point as well around sort of the future state of where all of this ends up, because if the truth ends up kind of being that compliance becomes that race to the bottom, that becomes a much lower commodity that firms kind of can't make as much money on as they have historically, then you're going to need, by definition, to ensure that your kind of systems are kind of structured and automated in a way that can kind of like see that process kind of be delivered on. And I think by having your kind of internal data and stuff in a shape that can be used and actually kind of understood, you're going to be able to sort of tease out those advisory opportunities and those kind of sort of real value add conversations with clients that you're not going to be able to do if you either don't have anything in place by way of like sophisticated practice management, or you don't kind of have your client reporting structured in a way that can kind of provide those insights and stuff. So it's really about kind of future proofing yourself, yes, to be always sale ready, but also just to remain relevant in what the future of this industry is going to look like.
Absolutely, absolutely. One question that often gets asked to me as well is, are more technology advanced practices more value? So are they more attractive? Do they give better valuations? And for me, as I've spoken about many times, is it doesn't always lead to a higher valuation, but it certainly make you a lot more attractive to an acquirer if you've got all that data together and make it easier. But from the valuation point of view, going back to the point we were talking about earlier on, it tends to be if you have the right automation systems in place, then your profitability is going to go up. So by proxy, the valuation will go up, because whatever the multiple is applied, if the baseline profit is higher, you're going to get a better valuation.
Yeah, I couldn't agree more with that. And to be fair, you're probably sort of like more at the coalface of those sorts of conversations and sort of like transactions on a day-to-day basis than I am. But I think even just from a common sense perspective, it feels like having your kind of practice sort of structured and sort of operating in a way that's more tech enabled and stuff is absolutely going to pay a whole host of kind of benefits when it comes to going through that particular sale process. But I think the point you raised there is a really, really neat one as well. Even if the kind of isn't an immediate sort of like higher multiple kind of argument that you can apply to having a more tech enabled practice, I think just being a business that is kind of a more attractive kind of like target because of the fact that you're actually operating it in a way that isn't like a complete chaos is really, really powerful. I think you kind of, and again, you've probably come across this and seen this, many times over the years. But once you get into a due diligence process and stuff, and once you actually get into the kind of, conversations with firms around actually, how all of these numbers are actually coming together and how it makes sense. If you're kind of looking to buy a practice that can't explain that story and can't kind of point to the systems where the data's held and can't kind of surface the information that's being requested, even if the kind of the numbers on paper are making sense, if you kind of like present that kind of disorganized kind of like shop front and stuff, then you're not gonna be an attractive kind of target. And I think if nothing else, you're going to end up kind of like sort of closing the net on the number of people that might end up being interested, and so by definition might end up having your price squeezed and stuff. So even if there isn't any kind of like tangible kind of benefits or kind of benefits to actually kind of having a more or a higher multiple based on kind of tech enabled sort of mindset, I think, again, if nothing else, the common sense thing to do is to kind of approach that thing in a way that you'd have it structured properly.
Yeah, hugely. And there's 2 points there. There's both pre conversation. If an acquirer's got two practices in front of them, one is, as you say, tech enabled and kind of keeping things up to speed, and you've got one that's back in the 1960s, still loads of paper files, using spreadsheets, not really using the latest software. The acquirer is obviously going to go for the practice that's more tech enabled. It's going to be less resistance to change when they move forward, but also a lot more attractive and easier to kind of integrate and migrate everything over to them when they do get acquired. And as is shared as well, when you're going through that DD process, getting that information is super, super important. And I guess the next point is that post deal being agreed, going through DD, as we know, time kills deals. And and for me, whenever we're going through transactions, the thing that holds everything up the most is gathering that information. People, take sometimes weeks, sometimes months to get the information together that the acquirers ask for. Whereas if you've got it all at your fingertips because you've got a good practice management tools or other software, you can just bring it up, report up pretty quickly, and provide that, which is just going to make conversation seamless. Is about building the right energy around the conversation and keeping that flow of dialogue nice and trim.
100%. I think it's really kind of interesting as well. Again, just to almost go back a couple of points before I kind of dive too much onto that one from my perspective. But I think there's a lot of firms that, and again, there's one in particular that kind of sticks out in my mind off the back of some conversations I've had over the last couple of months, that kind of is of the mindset that their kind of eventual sort of end state is going to look like an exit in maybe the next kind of 12, 24, 36 months, whatever it looks like. And kind of having that in the back of their mind almost takes their own finger off the pulse in terms of actually wanting to kind of keep your technology and your systems and your data and stuff up to date, because they've almost checked out before the processes have even started, thinking like, well, it doesn't really matter because we're going to get to a point where that practice is going to end up being hoovered up by whoever it ends up being. And I think it's a really dangerous mind frame to be able to get into, because I think this stuff very, very quickly becomes untangled and out of date and disjointed. And if you're somebody that's kind of if you kind of know what your kind of end goal looks like in terms of exit or merger or whatever else, but you kind of check out too early in terms of ensuring that your technology and your data and your systems are up to date, then I think it's a really dangerous game to kind of play in terms of what you can end up doing to that practice over even a couple of months, let alone a couple of years or so.
Yeah.
And so I think any business that I talk to that's kind of that mindset and going through that particular journey, that's fine, but we shouldn't kind of take our finger off the pulse in terms of the actual projects and stuff that we're looking to kind of either deliver on now or kind of maintain now, because again, very quickly all of this stuff can get untangled and stuff, and that then all really does start to come out in the wash, where you go through that kind of, yes, the transaction process, but then the potential integration process and stuff that falls off the back of it and stuff. So I think for me it's kind of super important to ensure that this stuff isn't just something that you kind of do and then forget about, but you kind of do it, you kind of, you maintain it, you remain consistent until you don't need to anymore. And that only really is when you've got your money in your bank.
I think MTD is a prime example of that at the moment, where there's so many practitioners up and down the country that are like, I can't be bothered to go over the transition. Let's just make it someone else's problem. And they're not keeping a pace of what's going on.
Yeah, 100%. I mean, MTD, presents a whole host of, opportunities, but also kind of challenges to firms. And again, like much with the kind of AI debate, I think firms at the moment are still in one of two camps. They're either in the camp of, this is terrible, this is awful, we're not going to kind of, get on board with this, maybe because, as you mentioned, they might end up exiting their practice soon, and or because perhaps they are in denial about the fact it's all coming and stuff, or whatever else in between. But the reality is it's coming, and I think there's a whole host of opportunity there for firms to be able to kind of lean into, to be able to increase yes, efficiencies, but also opportunities within their client bases and stuff. And regardless of whether it's MTD or e-invoicing that might be coming in the kind of like coming months and years, or any other regulatory change, I think all of that stuff, you need to kind of be leaning into that kind of, change by way of kind of surfacing opportunity, and also kind of ensuring that you're approaching it in a kind of, technology enabled way. It's as simple as that. And, again, I think it's really naive of practices of any size and scale to kind of, dismiss it as somebody else's problem, because, they might not be around in a few months or a few years time. And yeah, again, I don't think that's the type of mindset that anybody should be taking into this sort of stuff. And again, like regulatory change ordinarily is the kind of change that really forces people to actually have to act upon stuff and actually, consider how, technology or new ways of working can improve. But yeah, MTD is going to be a super interesting one, I think, over the, over the coming months still. I mean, if anything, like the kind of MTD changes with VAT as well. I mean, there's still kind of lots of bumps and hurdles to overcome before we truly see the other side of it. So
yeah, I mean, obviously with that regulatory change, it's not helped the fact that the can's been kicked down the road a few times now, and people just having to start getting prepared for it, and then it's been kicked down the road. Okay, we don't have to make that change now. So really super interested on that point. So we talked about obviously getting prepared for sale, and you was
Mhm.
part of that sale process
Mhm.
previously for your own firm. Post acquisition, from the
Mhm.
acquirer's point of view, what are the key points that they need to be thinking about in terms of integration, migration? You've certainly seen it from the Cooper Parry side with their own acquisition program as well.
Yeah, exactly. I think if I kind of take Acclivity as a case study and then maybe expand on that slightly. I mean, I think what one of the kind of key lessons learned from our perspective was that just because it works in a kind of small kind of independent boutique environment, it doesn't necessarily mean it's going to be able to translate kind of as well into a bigger kind of like more corporately sort of like governed and structured consolidator like Cooper Parry. And I think to drill down into that, a lot of the efficiencies and systems and technologies that we were able to run really quite well as part of that sort of smaller boutique world. Kind of, although kind of, the intention was to try and bring all of that stuff in and allow it to continue operating kind of independently within the kind of Cooper Parry sort of sort of environment. It became really challenging to be able to do that, and I think there were some lessons learned there in terms of actually maybe thinking about sort of that in a slightly kind of different sort of lens than perhaps we did. And look, ultimately, I think if you're the acquirer that's looking to kind of bring a business in, you need to kind of have a well thought out kind of like plan and strategy around actually how all of that stuff, is going to end up working in your new world. Are you going to continue to allow that business to operate, independently and just throw your brand over the top of the front door, or do you want to kind of actually fully kind of strip out what they were doing historically and kind of integrate it into your, systems and processes? And Cooper Parry specifically, I think, in fairness to them, have done a great job over the last couple of years and evolving and kind of making that whole function a lot more kind of slick and sophisticated in a way that it really is now quite well-oiled machine. I think when Acclivity kind of entered the fold, it was kind of like we were the first guinea pig really of this whole process, and I think naturally there were going to be kind of like teething kind of issues and pain points that we were to experience and stuff. But I think kind of more broadly as an acquirer, you really have to kind of have that kind of understanding mapped out, and kind of the stakeholders on all sides of the fence kind of bought into that process as well. I think if you don't do so, you very quickly run the risk of upsetting both your internal people, but your kind of external client base as well. I think it's when you start to see kind of like high levels of attrition, again, both in the client world and in the kind of employee world as well. And again, just because you've kind of on paper got the right solution, if it's not managed and kind of governed properly as part of a proper change management sort of like framework, then things are going to ultimately end up falling through the cracks and stuff. And I think from my perspective, that's the kind of key thing really. It's bringing your kind of people on that journey and ensuring that it's being done in a way that is kind of beneficial to their long term kind of involvement in the business, and also as well kind of not upsetting and hacking off too many clients along the way.
And so, just getting a little bit more granular on that point there, is it more of an education piece for, say, the selling party, their staff and team coming over and being using the acquiring party software? Is it about educating them on how to use that particular software? Is that kind of where one of the main hurdles are, as well as the clients, of course?
Yeah, I think so. I mean, again, like if you're kind of like, running an accounts sort of or a year-end accounting function and stuff that's delivering, all of your outputs on, I don't know, let's call it Sage, for example. And then suddenly you start mandating that on day one, that entire kind of business unit needs to migrate and move over to Iris to start delivering your kind of accounts preparation, for example. That is going to be a really unpractical kind of way to be able to approach that particular example, because naturally you haven't addressed the kind of like the training or the kind of like the workflow kind of changes, or any of the other kind of considerations that are needed if you were to govern that as part of a more proper change management program. And I think again, you might have a kind of overall mandate that your teams might need to migrate to that kind of new way of delivering accounts moving forward. But the reality is you should probably then, govern sort of day 1 to 90, for example, in this sort of like, incubated, sort of isolated kind of phase that doesn't sort of like rock the boat or disrupt things too much, whilst you allow things to kind of, settle and actually kind of like make that more or that longer term kind of like change management kind of journey. And I think that's the key thing really. And there isn't a right or wrong answer in my opinion as to how to approach that and how to do it. I think all firms, all kind of transactions, all kind of all kind of scenarios might end up varying dependent on the nuance that exists in that practice. But I think planning is absolutely key. And I think for me, if you're not doing it in a way that kind of brings your people on the journey, then you're setting yourself up to fail.
Yeah, no. And one thing that seems to have changed quite a bit over the last couple of years for me is the migration, probably maybe more around practice management softwares as such. Beforehand, acquirers are like, I don't know, if they were using Iris, they'd go, I need to acquire another Iris firm that uses practice management. That doesn't seem to be as much as a hurdle now. People are quite open to acquiring a firms with practice management. Has there been something that's changed in there? Has it become easier on the migration point of view from one software provider to another?
I think it probably has become easier from software to software. Again, I think with the advancements in technology, kind of probably bring greater or easier ability to be able to migrate from system to system. But I think kind of more generally, like the advancements and the accessibility of things like data warehouses and like in lake houses or whatever you want to call them, like a whole host of different terminologies. But ultimately, kind of like data has become much easier to be able to sort of structure and use in a way that you can still you can be pretty system agnostic in terms of actually how you're operating, because ultimately if you have a kind of an internal tech team or an external kind of provider that can actually help you structure your data and actually use it, it doesn't really matter what system it's operating in. So I think there's definitely kind of more of that going on at the moment in terms of firms approaching things like data warehouses and stuff with the kind of lens that it doesn't really matter kind of what kind of systems we're inheriting, because ultimately we can throw it all into this
Yeah.
kind of pool over here and actually still use it in a way that's helpful to us. And maybe that's a short-term fix. Maybe that's something that allows them to, as I say, between maybe day 1 to 90 or over the first 3-month period, continue to operate the firms more independently, but still be able to report kind of at a more macro level on the kind of like financials and insights and stuff. But even longer term as well, there's lots of firms now that are sort of happy for particular teams or particular kind of like acquisitions to to be able to operate kind of their own sort of legacy systems, but actually have a more sort of central data repository that can kind of control a lot of the stuff that you would ordinarily have to have as part of one sort of like infrastructure. So yeah, I mean, it probably has become easier to be able to sort of manage things like data migrations and stuff, but I think kind of the advancements with things like data warehouses and those sorts of things have definitely made it more straightforward as well.
Yeah, it's definitely a sea change that I've seen, as I said, over the last few years. Going back 4 or 5 years ago, it really was like, if they're not using similar or the same softwares to us, we're not going to be interested in acquiring them. Whereas now it's no problem, James. We can acquire that, and we'll set up some sort of planning to be able to deal with that migration
It,
across.
it's interesting though, isn't it? Because I mean, there still must be a degree of uh, kind of, or appetite perhaps is the better word, in terms of firms wanting to target acquisitions that have got sort of similar or the same systems. I know that Carbon about 6 months ago now released their kind of like M&A sort of tool or kind of like community or whatever they kind of describe it as, which basically allows kind of carbon-based firms to be able to be married up with carbon-based firms and stuff, so that if you were to go through a transaction cycle and stuff, you've kind of that you're inheriting a business that's actually kind of operating on the same sorts of systems. And that was a relatively new thing that they've launched into the market, so people like that might still see kind of a relevance around ensuring that you're targeting kind of firms with similar systems. But I think that's going to become less and less relevant, in my opinion, over the coming months and years, because of the continued advancements around technology and sort of data accessibility and those sorts of things.
Yeah, and I'm certainly seeing that in real time from our side, and the rest of my team are as well. So just before we move on, those that maybe are listening in here that haven't acquired previously, if they are on the acquiring side and they're currently, I don't know, evaluating an acquisition opportunity, in terms of that journey of migrating or taking on new technologies from the business that they're looking to acquire, what are the three main things? I mean, the one that's coming through loud and clear is that change management planning piece. But are there two other kind of areas that they should really focus on and concentrate on when evaluating the acquisition opportunity?
Yeah, I mean, I think if we're looking at this specifically through the kind of technology lens, I mean, yeah, I think you're right. I'd kind of like put up there, if number one, change management, and yeah, I've kind of banged that drum enough. I think kind of ensuring that the systems and the technologies that you have got are ideally kind of knitted together and sort of, automated in a way that kind of has them talking to each other, I think is super important. I think what we see kind of too much of still at the moment is, a reporting tool sitting over here, a practice management tool sitting over there, maybe a KYC tool sitting over there. And maybe that is the kind of, I've just done something really funky with my camera. Maybe maybe that's kind of the right stack that kind of makes sense. But if your data isn't flowing properly between system to system, then I think that kind of that isn't helpful, because you end up kind of having double keying and sort of issues and stuff. So I think kind of the correct level of sort of automation or APIs between systems and stuff, I think is super important. And I don't know, if I was to pluck a third one out the air, I think kind of operating or kind of having the right sort of like training and the right kind of like understanding of the systems and stuff is super important, because again, you could have the best technology stack in the world that's kind of got all the data and stuff flowing between different places and is kind of doing its thing, but if no one knows how to use those systems, and if no one's clear on how those systems are kind of set up and how they should be used, both in terms of existing people in the practice, but also for potentially new kind of joiners and stuff coming on, or the acquirer looking to kind of take that business on. If no one knows how things are operating, then that's really unhelpful. So I think kind of having the right level of kind of like training and kind of documentation in place, combined with systems that are kind of ideally automated, or at least talking to each other in terms of that flow of data. And then, really kind of ensuring that you've got kind of a proper kind of understanding and the proper lens on it from a change management perspective, and how you're actually going to take that stack and plug it into your practice, or allow it to continue operating independently with the right kind of reports and kind of data accessible to you. I would say are my kind of three kind of main things that I'd pluck out.
No, thanks for that, Luke. And I think something that's been quite interesting for me over the last couple of years, again, it's probably a sign of the times and just how many solutions are out there now, is as acquirers are going on their acquiring journey. Beforehand, it used to be that they would have their inherent tech stack and that would dictate what they use going forward. But what we're seeing a lot more now is where they might be acquiring smaller firms that have explored other solutions that they might not have realized. They're actually looking to get best in class. So they're understanding how they use their tech stack at this point in time and adopting it on their journey. So as they go through the acquiring journey, they're bettering and bettering their own tech stack themselves as an acquirer, rather than being the dictator as such.
Yeah. And again, I think that's a really interesting kind of like point back to what I was saying earlier around having that mindset and actually doing that. I think is absolutely something that should be promoted more. I think you sometimes run the risk when you kind of certainly some of the bigger kind of consolidators and stuff that exist in the market, they're almost a bit dismissive of some of those kind of best in class technologies and processes, because perhaps they're less tried and tested, perhaps they're kind of lesser known quantities in terms of actually kind of how they will operate in a bigger environment. But I think kind of having a mindset of actually being interested about kind of, keeping, those sorts of options on the table if they are best in class versus what we're currently doing, and figuring out how to scale those up and actually use them as part of, the new world moving forward. I think that's a really, really kind of, well, yeah, important, but also kind of like quite strategic mindset to actually carry in stuff. And yeah, glad to hear that you're kind of seeing some practices at least that are still doing that.
No, absolutely, absolutely. Well, look, it's been a really interesting conversation, Luke. Appreciate that. And to kind of close off and summarise, for me, I'd love to look at a bit of future gazing from your side as someone who's got their finger on the pulse. Yeah, what excites you the most about what we're seeing around technological advances right now within the accountancy practice sector, and what you think the further developments will be as people adopt AI and technology further as well?
Yeah, I mean, look, to pluck out that buzzword, I think AI is ultimately kind of like, the exciting thing that's coming down the track. Again, like you hang out at DAS, like, I did a couple of weeks ago, and you kind of like, you see the noise in the market at the moment around what AI is doing and kind of how it's being incorporated into a whole host of different sort of like softwares and stuff. That's super exciting. And again, I think for firms that are able to really kind of address those sort of like foundations in terms of ensuring that their systems and their data is structured in a way that can really benefit from that stuff, I think there's a huge amount of excitement that comes with that. I think we're going to end up seeing a world over the next couple of years and beyond that kind of reduces the need to have kind of as many people operating in accountancy practices, we'll still have a need to have good people working in firms. Like, there's no doubt about that. My view is that,
Of course.
much longer term, we'll still have good people operating kind of within practice, but the kind of their roles and their responsibilities will end up evolving to get rid of all of the kind of boring, monotonous, kind of mundane sort of like data sort of like, heavy sort of work, and that will all get replaced by, AI agents, and we'll end up kind of seeing a blend that firms have, yes, good people, but less of them, I think, and kind of like, more kind of like, AI sort of like agents operating. And that to me is the kind of really exciting sort of transition that we're starting to see. I think, the advancements around, things like bots and robotic process automation and all of that sort of stuff is also kind of super exciting. And, there's a couple of really interesting projects I'm working on at the moment with firms around how, using that type of technology to be able to automate workflows and kind of processes and stuff in a real kind of end-to-end way is super, super exciting. And I think the art of the possible with all of that sort of stuff is how far your imagination can take you. And I think that, for firms that have got that kind of mindset about kind of embracing what is coming with all of this, again, all you need really is kind of, a whiteboard and kind of, half a day to be able to sort of like really build out some super exciting kind of and interesting quite structures that are going to end up, revolutionizing how firms operate. So again, they are still quite buzzwordsy at the moment, but RPA, AI, all of that sort of stuff, for me, people should be leaning into heavily, and for me, that's where the future of this entire industry is at.
For me, it'll be super interesting because there's two ways to look at it. You're going to have the opportunity to have better quality time with your clients and have those closer relationships and to give more advice. But equally, as well, with a lot of things being automated and tasks that are quite laborious, as we know, you're going to have greater capacity to where you might be only able to look after 200 clients, you're now going to be able to look after 4, 5, 600 clients
100%.
as well.
100%. I think it's exactly that. I don't think that the requirement to have good people working in good businesses will kind of disappear ever, frankly. I think that will continue to be the case. But what it will do, it will definitely kind of increase the capacity of those more senior team as well to be able to kind of have more face time with clients, kind of do more of the kind of like relationship building stuff, more of the business development work. And frankly, more of the interesting stuff that many
Yep.
people and most people like enjoy doing. I mean, I think, I don't know, there might be some exceptions to this, but I don't think many people will hold their hands up and say they love sitting down kind of churning out double entry bookkeeping kind of like day in day out. Like, if we can get bots and AI and stuff to solve all of that sort of problem, then that's probably a good thing. And I think if that can then free up the time of again, people across all levels in the practice, but to be able to go out and actually have those more relationship led kind of sort of conversations with clients, then they'll be able to do much more of that because they're not doing any of the boring, monotonous kind of day to day things. And I think everyone ends up winning in that scenario.
Yeah, and I think face-to-face interactions as well with more face time with the clients, as you'll know, just from those conversations, more work comes out of that because you're
100%.
able to have freer conversations rather than jumping on a Teams or dialoguing via email.
100%.
So yeah, more face time's going to create more work for the accountants and actually better value service for the clients as well. So yeah, I think it's a win-win, and as you said, it will take away all those tasks that, let's face it, accountants and all of us don't really like to get
Yeah.
involved with.
Yeah. And that's exactly it. And look, I mean, again, we talked about some of this during the talk that I did at DAS a few weeks ago. I think, like, again, one of two camps. You're either kind of like going to lean into that, love it, and embrace it, or perhaps you're still somebody that kind of, doesn't love the idea of needing to do that stuff. It's not everyone's sweet spot. Not everyone
Yeah.
kind of loves and enjoys the kind of, face to face kind of interaction and conversations. But I think as a kind of society and as a world, our skill sets are going to have to and will naturally and organically evolve, I think, into those sorts of things. I think it will become more taught and more kind of learned both in classrooms and in real life. I think kind of more people at all levels will end up having more exposure to that sort of stuff. And I think by definition, over the kind of next decade and beyond, kind of, human beings will end up evolving into people that become kind of, much kind of more accustomed to doing that sort of stuff, because everything else that has otherwise been done over the last, however many years is going to end up being taken over by, automation, AI, and yeah, I think kind of relationships, whether people like it or not, are going to have to be where the future's at.
Yeah, which is quite interesting because if you zoom out for the last few years, I guess that face-to-face interaction has been taken out of society quite a bit with technology, and now it's going the other way where it's going to force humans back to
Yeah,
that get in front of your people again.
and look, I really don't think that's a kind of bad shift to be able to have. I think there's a whole kind of generation of people that over the last decade have literally kind of been, and again, like might offend too many people, exceptions to this rule, but have led their entire lives off kind of like, smartphones and kind of tablets and sort of, relationships only being via kind of online forums and stuff. And you're right, there's a kind of weird irony to that now that whole kind of world is going to end up actually forcing people more back to having to kind of do a lot of this stuff, kind of, in real life. And that's I think quite a nice sort of like shift that we're going to end up seeing.
Yeah, no, could not agree more. Could not agree more. Well, look, really appreciate your time. Thank you so much for coming on. I'm sure it's going to be super interesting for those that listen in. And yeah, wish you all the best with the modern firm.
Thank you, mate. I really appreciate it. Thanks for having me.